What is the fear and greed index? We always see it on CNN, and how would you use it?
So the fear and greed index. So here's the thing, just from an overall view, and then I'll show you some pieces. First of all, the market is a representation of human emotion.
Hmm.
The sooner you figure that out, the easier it is to become an investor. Uh, there's a quasi logic behind things and looking at earnings and PE ratios and what have you. But on the edges, it is all about fear and greed, right?
Hmm.
And so all of these measures of fear and greed really, they're called sentiment measures, right? They actually go the opposite direction. So when everybody's really excited about the market to an extreme level, that's a point where the market can often turn around and start to go down.
Yeah.
When everybody's really fearful about the market at an extreme level, that's a point that the market can turn around. So most of these gauges, in between those extremes, it doesn't actually, if you back test those, it doesn't give you much.
Yeah.
It's kind of interesting, but you really watch for those extremes again, because that's when all of the sellers have already sold, at the bottom, and so the only people left are the buyers or whatever it is. So, got a couple of visuals to show you. I think that will be kind of interesting. I just think this is kind of funny. The emotional cycle of investing, and a little hard to read this, but optimism, excitement, thrill, euphoria are the first four, right?
Yeah.
So, things are going well. Nvidia comes to mind, and
Yeah.
just woo. And then, there's some anxiety because, well, who knows? And then denial, no, it's going to be okay. And then fear, desperation, panic, and capitulation. So, capitulation is that extreme fear to the downside,
Yeah.
right? Where people are just thrown in the hat. They don't care what's happening. They just got to get what they can get while they can get it, right? And oftentimes that can be a bottoming point, right?
Hmm.
You watch for capitulation. We talk about capitulation. Then it turns into despondency and depression, eventually turning into hope, relief, and optimism again, right? So
Yeah.
that's the cycle that's the human emotion cycle. And so there are some gauges of this that are out there. This is CNN's fear and greed index. Um, right now it's at 64 out of 100, right? So it's kind of smack in the middle of the greed piece. You can see, a month ago, back in,
April.
April, it was at 33. Not exactly the extreme fear level, that's for sure. That's why we were only down 5%, right? So, but it was, down there in that fear category. And so they have a way of kind of putting this together. They have different components that they look at. They're all equally weighted, right?
Yeah.
There's seven of them, I
Yep.
believe.
Hmm.
And so let's look at those just real quick. First of all, here's a longer term view of this index, and so you can see. Look at what happened there in October, and this is last year. October 27th was the low for
Hmm.
last year
Yep.
in that 10% drawdown. That's when that fear index got down into below 25, right?
Hmm.
And so that, again, if you look back at the gauge, below 25 is extreme fear, right?
Yep.
So there's at least one piece pointing towards buy, right? In this particular case, this sentiment index. Uh, and then if you look at it, really got up there above 75 in January, right, where people were really excited and the momentum was there and what have you, and it kind of held up there. So I guess that's the range you'd want to look at, is kind of that in this particular case, below 25 is a buy, above 75, at least have some caution.
Yeah.
And of course, we dropped back down here, to 33, as we know, in April, and have come back up now. So here's some of the pieces. So market momentum. So they're looking at the 125-day moving average,
Yeah.
right? So just how is that thing sloped and how is it going? So right now that's in the greed category. You can see it sloped pretty nicely. The price is quite a bit higher
Hmm.
than the average, right? And then the strength of the price. So this is looking at net 52 week highs and lows, right? So that's actually in the fear category right now. So there's still some room to grow there on a sentiment basis.
Hmm.
The highs and lows are still kind of skewed a little bit towards the lows as far as that goes. Then you have the breadth. So this is where you're looking at just across the board. Is it narrow like it was for a while with the
Yeah.
Magnificent Seven, or is it very broad with a lot more stocks really moving? And that's kind of in the greed area. So we got a lot more stocks moving, right? And then puts and call options. So this is just a ratio kind of between puts and calls. And you can see that's actually an extreme greed area. What that means is there's a lot of people buying calls versus buying puts. So when you're buying a call, you believe the market's going to go up, or
Yeah, because
or
with
the holding.
you're basically trying to buy a contract where you
Right.
purchase something at a lower cost than what you believe it'll end up.
Yeah, exactly. And so that might be skewed right now. It's a 5-day average. We had the meme stocks come back,
Yeah, there's a
and there's a massive amount of volume in calls on GameStop and several of these
AMC.
AMC, several of these others. And so I question whether that is, and that's why they use 7 and not just one, you
Yeah,
know.
you spread it
So
out.
yeah, that makes some sense. But I think that one's kind of interesting. But you know, you can get some skews. That's how they do it. That's how they make these runs on the stock. You can buy a call option, and with less money, you can control more shares.
Hmm.
And so when you buy a call option, Charles Schwab or Fidelity, whatever, has to buy some of those shares to cover that option. And so you're forcing basically more money into that stock. And so when you're running up against a hedge fund who has a big short position in GameStop, you can use the power of all of these little investors, little-ish investors,
Yeah.
and put the money into calls, which is very risky, believe me. Um, but then it forces these big firms like Fidelity, Robinhood, and Charles Schwab to buy, you know, the stock, and then it runs it up, and then the hedge funds have to buy it back because they're going to get killed on the short, and you get, you know, I think a couple days there, GameStop was up 170% in like 3 days. Most of that's come back.
Yeah, and it's kind of like a rug pull scenario where
Yeah.
you got this blip up and then you're coming crashing back down.
Yeah, it's I don't play those games, but it is kind of interesting. So then, of course, market volatility. So this is what's called the VIX index, and when that gets really low, you know, that's considered a time of too much complacency. So the market could come down when the fear gets really high in that particular index, above 30, for example. You can often get, you know, a really good buy point. And then safe haven demand. So this is the difference between the 20-day stock market average and the bond returns. Right now, that's extreme greed. No surprise. Bond market's been really pathetic for a
Struggling, yeah.
while, since the beginning of 22, actually, and versus the stock market, which is doing quite well in the last 12 months and beyond. So, and then just the last one here is just the quality of the bond. So when people are more optimistic, they're willing to go farther out on the junk bond, you know, spectrum.
Mhm.
And when they're not so optimistic, they're looking at the investment grade bonds, right? So this is neutral right now,
Yeah.
right? Okay, so it's a really good question. It's very fascinating. I actually think that I'm a big believer in the emotional piece of the market. You can almost feel it if you watch the market, kind of like I do on a minute by minute basis, day after day, decade after decade. You kind of get a feel. The market gets in a mood. The market's in a good mood right now. I can
Yeah,
tell you that.
no
And it
run.
was in a bad mood last month, and so you could see it coming through just in like earnings calls. I remember, you know, Netflix I thought they had a pretty good earnings call. Market was in a bad mood. They said a couple of things that set it off, and Netflix dropped like
Yeah.
12%.
They're looking for something to nitpick, essentially.
Yeah, good time to be reporting earnings is now when the market's in a good mood, and probably get some pop on Nvidia too. We'll see what happens.